200 tons redirected, not purchased on open markets, seized from flow. Gold that was moving through normal channels, refineries to dealers, dealers to markets, intercepted. Official buyers stepping in ahead of private markets. Large volumes captured before they reached exchanges, before retail could bid, before institutional buyers could compete. The grab happened silently. No announcements, no transparency, just flows that were supposed to reach markets suddenly not reaching them. And if you're trying to buy gold right now, trying to access physical metal at reasonable premiums, you need to understand why it's getting harder. Someone is taking the supply before it gets to you. And that someone operates with priority you don't have. Gold was expected to circulate normally this week. Mining output reaching refineries, refined bars entering dealer networks, standard supply chains feeding markets, the flow that keeps gold liquid, that keeps premiums reasonable, that keeps physical accessible to anyone willing to pay market price. Except the flow got interrupted. Large buyers emerged between refineries and markets, official entities, central banks, sovereign buyers with authority to redirect supply, and they're using that authority aggressively. 200 tons in days, metal that should be entering circulation instead, entering vaults that never release it back to markets. This shouldn't be happening. Gold markets are supposed to be open, competitive. Anyone with capital can bid for supply. Mining output flows to whoever pays best. Refineries serve highest bidders. Markets clear at prices where supply meets demand. That's the model. That's how commodity markets function. But when official buyers step in with priority access, when central banks redirect flows before they reach open markets, the model breaks. Private buyers don't get to compete. Market clearing prices don't reflect true demand. And the gold that's supposed to be available becomes unavailable regardless of what you're willing to pay. The timing reveals strategy. No crisis prompted this. No emergency. No public justification. Just quiet, aggressive accumulation during what appeared to be normal market conditions. Someone decided, coordinated, committed to capturing physical gold at scale while doing it invisibly. Before markets noticed, before premiums reflected the seizure, before private buyers realized supply was being diverted, and they succeeded. 200 tons removed from market circulation. And prices barely moved, because the seizure happened upstream, before the metal reached venues where price discovery occurs. This keeps happening. Every month now shows similar patterns. Official sector gold purchases increasing, central bank reserves growing. But the purchases aren't showing up in market data the way they should. Aren't moving prices the way large buying typically does. Because the buying isn't happening in markets, it's happening in flows. At refineries, through direct deals with miners, through channels that bypass open markets entirely. The gold is being captured before it becomes available, and private markets are operating on whatever supply manages to slip through. Large volumes were redirected away from open markets. That's the mechanism. Gold leaves the mine, gets refined, and before it reaches dealer networks, before it enters exchange inventories, before it becomes available to private buyers, official buyers intercept it, purchase it directly, remove it from the commercial flow, and that metal never reaches markets, never contributes to liquidity, never becomes available at any price to private participants. It goes straight from refinery to sovereign vault, bypassing the entire market structure that's supposed to determine price and allocation. This benefits someone. State actors are winning. Central banks adding to reserves. Sovereign wealth funds accumulating. Official entities building positions that private markets can't access, can't compete with, can't even see clearly. They're securing gold while it's still available through non-market channels, while they still have relationships with miners and refineries that give them priority, while they can still capture supply before it reaches competitive bidding. And every ton they secure makes their strategic positions stronger, makes their reserves deeper, makes their leverage over monetary systems more complete. The sophisticated officials saw this years ago. They started accumulating when gold was cheaper, when supplies were more abundant, when capturing flows was easier. And now they're accelerating, taking advantage of whatever window remains before the capture becomes obvious, before premiums spike so high that even diverted supply becomes prohibitively expensive, before private markets realize the game is rigged and start bidding aggressively for whatever metal remains accessible. The smart money, the official money, is front-running that realization, and 200 tons in days is them pressing the advantage while they still can. This hurts you. If you're trying to buy physical gold, you're competing for supply that's already been captured. If you're paying premiums that seem unreasonably high, it's because the metal you're trying to buy was taken before it reached markets. If you own paper gold, thinking you can convert to physical when conditions require it, you're assuming physical will be available. But physical is being systematically removed from circulation by buyers who have access you don't, priority you'll never get, and resources to outbid you at any price point. Here's the mechanism destroying you. Gold supply is finite. What mines produce is all that's available. That output normally flows through refineries to markets where anyone can bid. But when official buyers intercept that flow, when they purchase directly from refineries, directly from miners, they remove supply before price discovery happens, before markets can clear, before you get a chance to compete. And because the seizure happens upstream, you don't even know it's happening. You just see tighter supply, higher premiums, longer delivery times, and you assume it's normal market dynamics when it's actually coordinated capture. Liquidity vanished without explanation. That's how you know this is real. Gold markets that used to have depth suddenly don't. Premiums that used to be minimal suddenly aren't. Delivery that used to be quick suddenly takes weeks, and no one can explain why. No official reason, no announced policy, just conditions that deteriorated rapidly without visible cause. Because the cause is invisible. It's happening in channels you can't see, in deals that aren't reported, in flows that are diverted before they reach transparent markets. This won't stop, because the incentive is permanent. Central banks that are accumulating gold are preparing for monetary realignment, for systems where gold backing matters again, for environments where the nations with the most gold have the most power. And they're not going to announce this, not going to telegraph their positioning. They're going to accumulate silently, aggressively, using every advantage they have, priority access, direct relationships, sovereign authority, to capture as much gold as possible before everyone else realizes what's happening. Private markets are being starved of metal. That's the reality. The gold that should be flowing to exchanges, to dealers, to retail buyers, it's being intercepted, redirected, captured by official entities that don't return it to circulation. And the private markets that operate on whatever supply remains are becoming increasingly dysfunctional. Premiums are rising, not because demand increased, but because supply was stolen. Delivery times are extending, not because logistics slowed, but because metal isn't reaching the logistics network. Liquidity is collapsing, not because markets failed, but because markets are being systematically deprived of the physical metal they need to function. The grab happens silently. No press releases, no transparency, No reporting requirements that would reveal the scale. Just 200 tons that were supposed to reach markets, instead reaching vaults. And because it happened quietly, most participants don't know it happened. They see tight supply and assume it's natural. They see high premiums and assume it's demand. They see delivery delays and assume it's operational. They don't see the coordinated seizure that's actually causing all of it. Markets cannot price gold fairly when supply is being quietly captured. That's not a theoretical problem. That's current reality. Price discovery requires that supply reaches markets, that buyers can compete, that transactions occur transparently. But when official buyers intercept supply upstream, when they remove 200 tons before it reaches price discovery venues, the prices you see don't reflect true scarcity, don't reflect actual demand and supply. They reflect whatever metal managed to avoid capture, whatever supply slipped through to markets, and that's a fraction of what should be available. The next geopolitical shock forces this hoarding into the open. That's the trigger. Right now, the accumulation is quiet, deniable. Officials can claim they're just managing reserves, just diversifying portfolios, just responding to market conditions. But when the next crisis hits, when currency systems are questioned, when monetary arrangements are challenged, when gold becomes explicitly relevant to power, the hoarding becomes undeniable. The nations that accumulated will reveal their positions, and the nations that didn't will discover they're negotiating from weakness. This looks like preparation for a reset where metal decides power. Not paper gold, not financial gold, physical metal in sovereign vaults. The kind that can't be printed, can't be created digitally, can't be seized by other nations. The kind that has to be accumulated physically. 1 ton at a time, 200 tons at a time, from flows that most people don't know exist, through channels most people can't access, before the moment when everyone realizes gold matters and tries to accumulate simultaneously. You're trying to buy gold in markets that have already been raided. The supply you're competing for is what official buyers didn't want. The metal you're paying premiums for is what they let through. The physical you think you can access is what's left after they took their share. And their share is massive, coordinated, strategic. While you were assuming markets were fair, they were capturing flows. While you were assuming supply would be available, they were redirecting it. While you were assuming you could buy gold when you needed it, they were buying it before you could. The 200 tons that disappeared in days are just what's visible, just what can be tracked through refinery reports and trade flows. The actual capture might be larger, might involve deals that aren't reported, miners that sell directly, refineries that allocate preferentially, official buyers that don't disclose their full accumulation. The 200 tons might be the minimum, the baseline, the amount that couldn't be hidden even with all the opacity official buyers enjoy. Every ton they capture is a ton you can't buy. Every ounce redirected is an ounce removed from markets. Every bar that goes to sovereign vaults is a bar that never returns to circulation. The supply isn't being borrowed, it's being permanently removed. And the markets you're trying to operate in are operating on depleted supply, on whatever official buyers chose not to take, on the scraps of a flow that used to be robust and is now being systematically drained. This escalates with every purchase, because official buyers that are accumulating tell other official buyers they need to accumulate. Central banks that see peers building reserves decide they need to build reserves. Nations that watch others capturing gold decide they can't afford to fall behind. The competition drives more seizure, more interception, more diversion of supply away from private markets. And every round of this competition makes private access worse, makes premiums higher, makes physical gold more difficult for anyone who doesn't have sovereign authority. You're holding paper gold in a world where official buyers are accumulating physical, where 200 tons can be redirected in days without moving prices significantly, where supply is being captured before markets can price it, where your paper claims are backed by metal that's increasingly being held by entities that won't sell it back to markets at any price, and you're positioned as if your paper is equivalent to physical, as if markets will function normally when you want to convert, as if official buyers seizing flows doesn't affect your ability to access metal. The seizure is accelerating because the window is closing. Official buyers understand that once private markets realize supply is being captured, premiums will explode. Once retail buyers understand gold is being hoarded by central banks, demand will surge. Once institutional investors understand flows are being intercepted, competition will intensify. The window where they can quietly accumulate massive positions is temporary, and they're maximizing it. 200 tons in days, and more coming, week after week, until the capture becomes so obvious that markets price it in, and by then, the metal's already gone. The reset they're preparing for is one where physical gold holdings determine negotiating power in a restructured monetary system, where nations that accumulated have leverage, where nations that didn't are subordinate, where the paper gold that trades in markets becomes irrelevant compared to the physical gold in sovereign vaults. And they're positioning now, quietly, aggressively, before the reset becomes public, before everyone tries to accumulate simultaneously, before the 200 tons they're seizing weekly becomes impossible to seize because there's nothing left to take. You're watching central banks demonstrate through action what they won't say in words. Gold matters. Physical gold, in quantities large enough to back sovereign power. And they're accumulating it now. From flows, from refineries, from sources that bypass markets entirely. While you're watching paper prices, while you're assuming markets are fair, while you're planning to buy physical when conditions require it, they're buying now, and when you finally decide you need physical gold, you'll discover that the metal you are planning to buy was seized years ago by entities that understood what was coming before you did.